If you take a step back and you look at it, they throw out the idea of tariffs, which really don't seem what it is to me, and which allowed for all of these exchanges of for physical with fungible COMEX contracts into London, and the metal was flowing. And then I think they're starting to realize that this is deeper. So then they come out and say, well, it's not a T+1 anymore, it's T+8 weeks. This is a big deal. And it's a big deal because the banks that have been suppressing the price forever may just have lost the ability to do so easily anymore because they're not going to be able to offset these positions in London with massive unallocated positions when you have all these entities standing for delivery.
For decades, the gold and silver markets have operated under a system that many have long suspected of being manipulated. The London Bullion Market Association, LBMA, and the COMEX Futures Exchange in New York have worked hand in hand, creating a market dominated by paper contracts, unallocated gold, and complex derivative structures. This system allowed bullion banks to control prices with ease, keeping them in check through excessive paper trading that far outweighed the actual physical metal available for delivery. But now, that system appears to be breaking down. According to renowned bullion dealer Andy Schectman, recent developments suggest that COMEX is distancing itself from the LBMA, a move that could signal the beginning of the end for the long-standing price suppression mechanisms. Futures trading on the LBMA through COMEX has been suspended, effectively cutting off a key source of liquidity for the London market. This means banks can no longer hedge their positions as they once did, drying up the ability to suppress prices through leveraged paper contracts. At the heart of this shift is growing global distrust in the LBMA's ability to deliver physical metal. Major buyers, especially central banks, are demanding actual gold and silver rather than paper promises. Andy Schectman believes we are witnessing a major turning point. The drain of physical metal from Western markets is accelerating, and now, with COMEX severing its futures connection to the LBMA, the very structure that allowed price suppression may be crumbling. Could this be the long-awaited breakdown of the manipulated paper market? Are we seeing a seismic shift in the way gold and silver are traded and valued? In this video, we dive into Andy's insights on what's really happening behind the scenes, the growing rift between the LBMA and COMEX, and why demand for physical gold and silver is changing the game. Please watch, like, and share this video, subscribe to the channel, and turn on the notifications bell for more important updates about the precious metals market. We appreciate the support and hope you enjoy the video.
It's really, what the craziest part of it is to me, Dunnigan, is that if you would have told me that, gold was at $3,000, let me look at the futures here real quick, and silver over 34. Let me just see what the futures are here real quick. Of course, my computer never cooperates when I'm asking it to. So the futures on silver are up to 34.63, and the futures on gold are at 3,039. If you would have told me that that'd be the case and there's virtually no mainstream media attention, I would have said there's just no way that that can be the case. I mean, my entire career, gold at 3,000, people would have said you're crazy. I remember when Jim Sinclair said gold would hit 1650, and he was called, he was looked at as being, crazy. There's no way gold could be 1650. This is when it was 400 and 500. So to see it at over 3,000, to close it over 3,000, to breach that level, and really not to see any acknowledgement of it is really shocking, especially with what's going on in London and New York. In London right now, there's 200 roughly last week. I don't know, it's probably a little less now, but 279 million ounces of gold in London. Only 36 of that is available for delivery. The rest belongs to ETFs in the Bank of England. And that's standing behind 380 million ounces in outstanding spot contracts, 11 times nearly the number of contracts issued versus the amount of gold issued. And in silver, it's very similar. Roughly 270 million ounces of silver is all that's available of the 800 million. Now it's under 800 million, like 770, 780, because we saw 85 to 90 million ounces. That's what COMEX is on track for to be delivered for March of silver come into COMEX, almost all of it coming from the LBMA. And so and when you talk about 290 million ounces, and there's available, yet they're trading 2.9 billion ounces of silver. Again, a 10 times the number of contracts standing behind the or the metal standing behind those contracts, 10 times the number of contracts. To me, what it really speaks of is the lack of trust in the LBMA system, that no one trusts that they'll be able to deliver anymore. And they're trying to tell us that it's a logistics thing. It's a lack of trucks and a lack of manpower. I think they're realizing that the exchanges are being bled dry. And maybe now what we see is COMEX trying to distance themselves from the LBMA. In the last 3 months, 128.5 million ounces of silver have been withdrawn from London. And so you're talking almost 50% of the float gone in the last 3 months in silver. So between the amount of silver and gold delivered, not to mention all of the others that are standing for delivery, but they're being told it's 8 weeks. It seems like they're turning up the heat. And maybe, just maybe, that rumor of Trump trying to stick it to the Bank of England is really true after all, because this is a very provocative move. And I think, it really does speak of the LBMA losing confidence globally in its ability to deliver. And this is the beginning. So I guess we'll see what the real reason is. Much like most of the things we've seen lately on the LBMA and COMEX, we can assume and surmise what the real agenda is. Mainstream would tell you that's not the case. I don't believe it. I actually feel that we are witnessing a shift from this paper market that all of us thought would never be broken into other hubs like Shanghai, like Moscow, like Dubai. These are cash and carry exchanges where the price setting is far more realistic, instead of a futures market where it's 90% paper and 10% physical, and no one ever stood for delivery. And you and I have been talking about this, and the logarithmic decay, little by little by little by little, and then bang, are we at that point? Well, it sure feels that way when almost half of the available silver has been drained. And now they're saying it's logistics. We can't really get it over to you as fast as we would like. Demand for physical gold and silver is rising. And this is a move away from the Western markets. It's a big deal. We'll see how big it is. But yeah, I think this is something people really need to pay attention to, on top of the fact that it just continues to move higher. It seems almost every day now.
What we're seeing now isn't just a minor disruption. It's a fundamental breakdown of a system that has dominated the precious metals market for decades. The LBMA's ability to control prices has relied on a vast network of unallocated gold and silver contracts, essentially a paper market that allowed bullion banks to trade far more metal than actually existed in physical form. But as Andy Schectman explains, that system is now under immense pressure, and the numbers paint a clear picture. For years, the LBMA has functioned on a dangerously thin margin of physical reserves. In London, there are only 36 million ounces of gold available for delivery, yet the outstanding contracts amount to 380 million ounces, more than 10 times what is actually there. Silver follows a similar pattern, with 270 million ounces available against nearly 2.9 billion ounces in trading contracts. This discrepancy has always existed, but now, for the first time, it's being tested at an unprecedented scale. The suspension of LBMA futures trading on COMEX marks a turning point. This move effectively cuts off a critical channel that bullion banks use to hedge their positions and suppress prices through leveraged paper contracts. Without it, the London market faces a growing liquidity crisis. The cracks are already visible, with increasing delays in delivery times and concerns over whether the LBMA can continue to meet physical demand. So, is this the beginning of the end for Western price suppression? Andy believes we are witnessing a pivotal moment where the balance of power in the gold and silver markets is shifting from manipulated paper trading to real, physical demand. And with COMEX seemingly distancing itself from the LBMA, we could be looking at the final unraveling of a system that has long kept prices artificially low. Let's get back to the video.
The United States is now prioritizing delivery over paper, which is something wholly, completely different. Almost all the gold that has come over the 25 million ounces or so, almost all of it has already been delivered. So if this delivery continues, you'll see strains on COMEX as well. All I can tell you is that whatever is happening in London, it's the beginning of the possibility of an existential event for some of these banks that are massively short if they get copious amounts of delivery requests, 10 times the amount, 11 times the amount of paper versus gold. That's a situation I certainly wouldn't want to be involved in if I was a board member of one of these commercial banks.
So I'm still trying to get my arms around this COMEX delisting LBMA futures. The COMEX previously had allowed people to take future positions at London in New York. Is that the idea?
That's exactly correct.
So
That's
it sounds
exactly
like
right.
a vote of no confidence from the COMEX about the LBMA,
Absolutely.
while the LBMA has been saying
That's
nothing
exactly what it sounds like to me.
Okay,
That they
so
don't believe that they will be able to deliver what they said they would. And that's not a good thing. So yeah, and a lot of the banks who would hedge their positions would do so with unallocated contracts in London. So, you take these massive short positions and then try to hedge it with unallocated positions in London. That's not a good thing. It's going to, in my mind, start to really emphasize physical markets versus futures markets. And that's something that none of us would thought would have ever happened. Now, I guess we'll find out. But it's not just the United States. I mean, we've seen in India in January and February, 44 million ounces of silver delivered to India on top of all the silver they've been buying over the last 4 years. So, we're seeing China buy massive amounts of gold as well. And that's been well documented. China has purchased, what have they purchased? Let's see, I think I have that number. Central banks have purchased almost 1,200 tons in 2024 alone. So I don't have the exact numbers that China has purchased, but it's an awful lot. And look, the bottom line is that physical demand, de-dollarization, alternative exchanges, these things are all happening in real time and all at the expense of the LBMA. And it appears as though, I mean, if you take a step back and you look at it, they throw out the idea of tariffs, which really don't seem what it is to me, and which allowed for all of these exchanges for physical with fungible COMEX contracts into London, and the metal was flowing. And then I think they're starting to realize that this is deeper. So then they come out and say, well, it's not a T+1 anymore, it's T+8 weeks. This is a big deal. And it's a big deal because the banks that have been suppressing the price forever may just have lost the ability to do so easily anymore because they're not going to be able to offset these positions in London with massive unallocated positions when you have all these entities standing for delivery. People's Bank of China has added 600 tons of gold in 2024 that we know of, probably a whole lot more, not to mention what they purchased. But this heavily unallocated paper gold to physical ratio market is breaking. And when you realize HSBC, Scotiabank, JP Morgan, they depend on these derivatives and these unallocated this unallocated gold to hedge their positions. They're not going to be able to take these massive naked positions anymore, these positions that have allowed them unabated to manipulate the market. Because as I've surmised for a long time, there are entities starting with the BRICS and now the United States that are getting wise, I think, to just how important physical is in a game that's rigged. When you see Jeffrey Gundlach come out, the bond king, saying, $4,000 gold is easy and in the cards, you're beginning to see a lot of big name people understand exactly what's happening. And, $3,000 gold, if we see these trends continue, will be a distant memory. And I don't really talk that way, but it just seems as though these are the kind of things that could certainly push gold a whole hell of a lot higher. No question about it.
What we're witnessing isn't just a temporary market fluctuation. It's the potential unraveling of a system that has controlled gold and silver prices for decades. The LBMA's reliance on unallocated paper contracts is being tested like never before, and the suspension of LBMA futures trading on COMEX signals a major shift in the way precious metals markets operate. With physical demand surging, central banks accumulating at record levels, and alternative exchanges gaining traction, the balance of power is shifting away from Western manipulation toward true price discovery. If the LBMA and its network of bullion banks can no longer suppress prices through leveraged derivatives, we could be on the verge of a long overdue revaluation of gold and silver. The warning signs are clear: drained physical inventories, delivery delays, and a growing exodus of investors seeking real, tangible assets instead of paper promises. This isn't just speculation. It's happening right now in real time. So, the question is, are you prepared? If the system as we know it is changing, now is the time to educate yourself, take action, and position accordingly. Don't wait until the mainstream media catches up. By then, it may be too late. If you found this insight valuable, make sure to like, share, and subscribe to stay ahead of these market shifts. Drop a comment below. What do you think about this growing divide between COMEX and the LBMA? Is this the beginning of true price discovery for gold and silver? Let's discuss.